Recently, I had put up a poll on YouTube asking my followers that tell me which topic should I cover in my next video. As you will see on my screen right now, this was the question, and 55% of those who voted wanted me to talk about how to find winning stocks. The next one was 25%, more than half of it, that is 5 swing trading rules. I would focus on the 55% one, which is how to find winning stocks. Now, over here in this video, I'm going to take up this topic with two different angles. One from a trading psychology point of view, and yes, one from a trading setup or a trading strategy point of view. There's going to be a caveat to my explanation. So, hear me out as I explain to you how can you find winning stocks. First things first, honest answer to how can you find a winning stock? You can't. No one can. Because when you're taking the decision, you don't know that it's going to be a winner, no matter how hard you try. That's the beauty of the universe, and that's the beauty of decision making per se. If you have a certain degree of maturity, you'll understand what I'm saying. Be it in the markets or be it in life, we take choices, we make decisions. This conversation takes me back to again Steve Jobs' Stanford University speech, wherein he clearly shared with us that you can never join the dots forward. When you look back, in the hindsight, it's easier to join the dots, which means that you can never find a winning stock. You can do your best with whatever you have in your hands. You analyze without getting into analysis paralysis. You find as many parameters, as many non correlated parameters tell you that the stock or the company is looking bullish or bearish. And then, with all your understanding, analytical skills, intelligence, risk taking capacity, capability, with all those things, you take a chance. Yes, we all take chances. You take a calculated chance, and only in the future will tell us whether that was a winning stock or not. Hopefully they will be mainly winning stocks, and when you look back, then can you only then will you be able to say, yes, that was how I found a winner. So this was the trading psychology part. This was the trading psychology angle of my explanation to this topic. Now let's come to the practical aspect. That is, okay, spirituality and psychology, I understand, connecting the dots, yeah, blah, blah, blah. Let's figure out a high probability setup. Now, when I talk about high probability setup, that is where, multiple variables are indicating the same path. Almost a decade or a decade and a half back, when I used to take these kind of classes, especially for students in MBA colleges, etc., I used to take a very simple example that if you invite me to your house today evening over dinner, and I don't know your locality at all, and I'm a 1980s guy, and let's say I'm talking about 1990s or all. When I reach, your locality to figure out your house, generally in those days, people used to ask others, can you tell me which way is this lane or this house or this landmark, right? And so let's say I asked someone and he said, go towards your right, it's there. I take some 5, 10, a dozen steps and I ask another person and maybe another person. And when two or three of them are pointing to the same direction, do I get the confidence, conviction that I'm on the right path? I'll reach your home for a lovely dinner for sure. But if someone was pointing to the right, the other person was pointing to the left, then I'm not too sure what's happening. Today we use maps, Google Maps, Apple, and all those. You don't need two, three different maps, right? One map generally gets the job done. But you understand what I'm trying to say. What I'm trying to say is we need the similar kind of answer from different variables. So when it comes to high probability, it's a confluence of parameters telling us there's a probability it is going to go up or there's a probability it's going to come down. Now, this confluence of parameters can be purely technical, can be purely fundamental, or can be a mix of technical and fundamental both. Allow me to walk you through a pure technical setup. Take a look at my screen. I'm using TradingView as always. I'm using Heikin Ashi, and I was looking at the long-term monthly chart of this Tata Steel. Now, in the recent past, the stock has given us a decent sized rally. This is if I use the info line tool and if I connect the lows to the highs, then I will be able to figure out what was the extent of this particular rally. It was around 86 and a half, close to 90% rally. Even if someone or you try to catch up half of it, a 40, 45 to 50% kind of a move is pretty good from the monthly chart. Now, the point is this 90% move. I am not a trader or a chartist who's planning to pick the bottom. Neither am I trying to pick the top. That's the job of a contrarian trader. I will find, I will try to find a proper trend and I would like to, ride a bit of it. Maybe capture 40 to 50% of it. That's my objective, which means that I will have to have a high probability setup somewhere here, which would have told me get into the stock. Now, what are those parameters? I'm a pure technical analysis guy or a student of the subject. Purely in the last 21 years, that's exactly what I've done. So, sticking to the pure technical analysis school of thought, are there or is there any high probability setup somewhere here? Let's figure out. First thing that strikes, that I find really interesting in this particular chart is the fact of polarity, which means that when this correction was happening, it was coming down, the stock had already given us a breakout from a decent resistance. And polarity means that earlier resistances, once broken, can become future supports. And if they become future supports, then they can rally further. And so, clearly on this chart, certain degree of polarity was playing out. This is purely from the point of view of price action. Bhav Bhagwan che, price is ultimate, price is God. Yes, understandable, accepted. The distant second important variable after price is volumes. Now, if we come to the indicator section and if we plot the volume, then we get the monthly volumes on this particular chart. Now, if the underlying structure of the chart wants to go further up and it's strong and the primary trend is bullish, then any kind of correction should ideally come with lowering volumes. Lowering volumes means lower degree of participation. Please understand what we are doing is we are stepping out from the first step was price action, pure price action. And the second step we are taking is now that of volumes, which kind of meets the requirement really well. Volumes have been deteriorating, they were falling, and it gives us the confidence that yes, this is a short term correction, reaching some important area, zone, range, which was resistance earlier, can become supports, and the degree of participation is not there. So, at this area, within these days or these months, one would have analyzed that the stock has fallen. Is it at now perceived supports with lower degree of volumes? Either it will lead to a breakdown from here on, or there are chance of a revival, reversal, or in other words, continuation of the previous leg on the upside. So, one, we looked at price action, pure price. Two, we looked at a completely different variable, that is volume. Now, sticking within technicals, what else do I have? Sticking to the cash market of Tata Steel and not going to the futures and taking a look at open interest and premium and discount and all that, I can now go to derivatives of price and derivatives of volumes, which means I can look at indicators. Now, when you come into the world of indicators, it's vast. There are many indicators and it's very easy to get confused. And so you need to have a proper understanding of the definition or categorization of indicators. Trend indicators, momentum indicators or oscillators, volume indicators, breadth or sentiment indicators, relative strength, volatilities. There are many. So you need to not necessarily use all, but you need to use one or two or three different ones which will tend towards the same thought process that this stock might be going up. For example, trend indicator. What will you use as a trend indicator? You can use exponential moving averages, you can use Arun, you can use Supertrend, and they will essentially, most of the indicators, if we go to the indicators section here and type EMA, we have the moving average ribbon, which is a combination of multiple moving averages. And if you plot them, this is the default, I think, 50, 100, 150, 200, something like that. But even if you plot the sensible combinations, they will tell you that the long term trend is up. For better understanding, if I come here, it's 20, 50, 100, 200. So 200 is the long term, 100. They're all sloping up, they're one on top of the other. Any sensible combination of moving averages, if you use for the long term Tata Steel, this particular monthly chart, the trend will be up, is going through a correction. If it's going through a correction, then your oscillators or indicators, which are your RSI and stochastics and all those, they would come close to 50 or even go over sold. RSI is a very popular indicator. I extensively have worked on RSI. If you plot the default 14 period RSI, you can see it came down and it just touched 5050, which is the central point, the midpoint. It has been up above 50 for quite some time, which means from here onwards, the structure of the chart has been particularly bullish. And every time it has come close to 50, close enough, it has led to a revival. So when it comes down back again close to 50 with the polarity, with the volumes, I hope you get the picture. We are adding up one variable after the other. You can leave the final decision to price, wait for the Heikins or your candlesticks to improve, then you take a call and enter. Or you can bring in another timing indicator, an indicator which helps you to time, means crossovers. You can use Supertrend. I'll show you two of them. You can use the Supertrend. Supertrend, you can use the parameters like 2, 1. Now, please understand, over here, the use of Supertrend is not necessarily for the trend. Over here, the use of Supertrend is tell me that you have turned up. This is when it's telling me, that's the indicator indicating to me I've turned up. This is based on which I will enter. I'm looking at it, I'm observing, I'm hopeful it will stop somewhere. Supports are kicking in, RSI is holding above 50. All right, flattish, you're going up but not able to sustain. Too much volatility, not bad. Yes, that's the thought process. That's the narrative. Sir, it reversed after two, three candles. I'm greedy. I want it to be, as close as possible to the low, which means either you have to lower the parameters of super trend from 2-1 to 1-1. You might get one candle earlier. There you go. That's one possibility. Or you can have some faith on oscillators, which gives us crossovers like stochastics, or I prefer the stochastics momentum index. You can bring it on, you can go to its settings. I generally prefer something like, let's say, 422 for the monthly chart. 422 is fairly okay. And then over here, you see that we got the crossover somewhere here, somewhere in this area. This more or less will give you somewhere in this area. You cannot be, this is not a perfect science. You don't have to get it right at the time of entry and right at the time of exit. As long as you're sorted, as long your analysis has different flavors to it, and as long you stick to the discipline of your risk management and you don't get impulsive, you're fine. I think you're better than 95% of the people who are trying to do the same thing. So we don't get to choose a winning trade. We don't actually find a winning trade. We try to find a trade which is backed, which is supported by multiple non correlated variables. In this example, which I walked you through, first I took a look at pure price action, second, volumes, third, trend, fourth, oscillator, that is RSI, fifth, the trigger of giving me an entry. Of course, I can add the sixth, which is the Heikin Ashi. I can trail it with the super trend for a clean exit, so that throughout these maybe 8, 10 months, I know where is my exit point. I'm not getting anxious. Where do I exit? So this entire trade turns out, when we look back, when we exited at this point and we look back, nice. This was a good multi-month trend. This was the winner. Now, as I have spent the last 21 years with charts, I did stick to an example of technicals only, but you can mix it up. You can create a concoction with fundamentals, few basic variables, few basic requirements, maybe sales, maybe earnings. For me, earnings is extremely important, though I do not make it a very important variable in my analysis, but earnings definitely is important. So if you understand that, if you want to adopt a mid path wherein you're going to bring in a bit of technicals for price and timing and a bit of fundamentals for the quality of the company, surely you can do that. And once you've done that, you create a strategy. The strategy, you have to wait patiently for the strategy to give you high probability um, junctures in time and price. And for that, patience is a virtue. You cannot be impulsive, right? I hope in this video I have tried to explain to you that we never make the best of decisions. We take choices, we make choices, we take decisions with our best intent and our best objective. And we kind of hope, yes, kind of hope that it all plays out well. It doesn't all the time. When it does, pat yourself and move on to the next decision. And when it doesn't, learn from the experience and still again move on with the next set of decisions. I hope my video would have served some purpose to your endeavor. Till then, take care of yourselves. Trade well.